Doing this for a long time. I personally have not been washed and rinsed because I am quite clear that gold is real money and that it does not, Wall Street does not reflect its true fundamental value at this point in time, because a rising gold price is an indication of a failing fiat currency. And if you actually understood that this currency that we work for, and we barter with, and we even try to save, and we put it in the stock market in hopes it goes up, because we know that it takes more and more. We know that inflation is eroding whatever little bits of the purchasing power is left, and the central banks are completely committed to that. We need more inflation. We're going to let it run hot, right? I mean, it's garbage. You presumably couldn't hit the 2%, but that's, of course, based on what you're looking at. And they don't change behavior. They just change the rules, right? But in day-to-day things, food, energy, all of the things, education, medical, insurance, the things that we use every single day, really, they're not inflating. Really? Been to a restaurant or ordered in from a restaurant lately? Mm. I mean, I remember when if you spent $25 on a meal out, you had appetizers, you had the main course, you had dessert, you had a bottle of wine, and it was at like the nicest restaurant. You know, now what are you doing? You're paying that for
Five Guys.
Yeah. So is it
they're like $10 burgers though? That's another they're inflated just by themselves.
Well, okay, I have never actually said this, and maybe I should have say this now, but let me just say this. In the restaurant business, it is very, very tight margins. There's not really a whole lot of room. And with the breakdown of the supply chain, which has not been fixed either, it's kind of like a double whammy. So, and with all of the delivery services and all of those fees, I mean, I'm glad I don't own a restaurant at this point.
Yeah, yeah. Well, and you know, I've talked to other bullion dealers, and there's a certain degree of that going on with gold and silver, in terms of the supply shortages.
Exactly.
So, you know, your that connection just reminded me of what's going on with the physical now.
Exactly.
Just tell us a little bit first, before we get to that. I'd love you to expand on what is happening in your opinion and kind of what you've observed with the 10-year bond. Maybe articulate that and share some information on that.
Absolutely. Well, you know, I know that you remember the repo crisis in September 2019, which was really the beginning of the end. And the reason, for viewers that aren't familiar with it, the importance of the repo market, it's how corporations fund their day-to-day operations. And it's tied directly into money markets. So you have an investment account and you have some cash that you want to maintain. And so you think that a money market account is like a savings account, but it's not, because that's used to fund the repo market, which froze back in September of 2019. And then Jay Powell went in, pumped a whole bunch of money in there. You know, we watched it. You could go on the Federal Reserve of New York's website and see how much they were pumping in on a day-to-day basis. Interestingly enough, in June, it flatlined. All of a sudden, if you go into the Federal Reserve's website to look at what's happening with repos and reverse repos, it's at zero, a big fat goose egg. What? They don't need to help that funding market anymore, or it's gone dark. And when things go dark, that means that they are hiding something. The other thing, and I just saw this the other day, TYVIX, which is the volatility index on that 10-year treasury, which is the foundation of the global market. It's the largest market in the world. It's the foundation of it. they stopped publishing it. May 15th, 2020, last day that they published it. 2 weeks before the Federal Reserve of New York went dark on what they're doing in the repo market. What do you think that means, Kenneth?
I think they're losing control. And I see what they're doing in terms of levels of stimulus, levels of attempts to contain everything. And I just don't, I think what the headline was, 40% of US dollars that have ever been created were created all in 2020. And I think about that, and like the levels that we're going to contain the system is just going up exponentially. And how long can that go on for? That's the magic question, right? You know, and so I see it is on one hand, it's demoralizing. We're continued to encourage to trust the stock market, trust real estate, trust the dollar, trust it to save, trust the banks. But at the same time, you know, you look at the fundamentals.
Don't trust silver, right?
Yes, don't trust gold and silver.
Physical, in your possession. Yeah, no, who wants that? You definitely don't.
Tell us what's going on, boots on the ground with supply, premiums, shortages. You know, even on a day when gold was down $20, and what are we seeing nowadays?
Well, Kenneth, you have to understand that I don't really work directly with clients anymore. So my hands aren't in that piece, and I just get the feedback from Eric and, you know, and others in our organization, the consultants. But I do know this, the premiums are not as bad as they were last April and May, but they're definitely still there because we're good in that our wholesalers are still willing to allow us to position a product with a client, but you're going to have to wait maybe 3 months before you're going to get it. Now, if they didn't think they were going to get it, we would not be able to position it. We wouldn't be able to sell it. So that's the good news. And this same thing happened in 2008, but this has been going on now for a year, for almost a year. And what that tells me, I can tell you, I'm not selling my gold or silver. I'm buying as much of it as I can, as often as I can. And I don't care what the premium is because 100%, I mean, a gazillion percent. Right. I know that the fiat money prices that they want you to believe gold and silver is worth they have not been reflecting a true supply demand market probably in about forever, but certainly since the central banks came in after 2008 and said, we are going to manage these markets. And that's for their own protection.
Yeah, I mean, and nominally, what else can you buy that's trading below its 1980 high, talking about silver? I mean, it blows my mind to even think that we can even be here in silver, you know, and of course I look at the spot price and I'm conditioned to just think, man, it's just such an uphill Mount Everest battle to get over $30, but it's nothing when you think about it. It's nothing, but yet here we are. They're constantly doing what they can to manage that. And maybe just talk about that. Talk about the management of that, and maybe your thoughts on how much longer they can go on managing it. And I'll throw with this one last thing. You know, we'll focus on silver. I know I say a lot of things and ask you a big macro question with a million points and angles, but we'll talk about silver. When it comes to their ability to manage, some may say if it was going to happen, if silver was going to have its moment, it was going to be last March, last April, and we didn't see it.
Oh,
what do you say to that?
100% disagree with that. You know, number one, if you are counting on Wall Street to give you a fair valuation on anything, you really need to think again, because this is not a free market environment. You know, it is a market environment, and I'm a capitalist. I will say that outright. I am 100% a capitalist, but what we're experiencing is not capitalism, it's fascism. And I'm not a fascist. I'm a capitalist. So, last March, let me tell you, when gold and silver will be untethered from this is when it gets too expensive to continue to support the system. And I'm talking about for the central banks. Or they lose control, which looks like is what's happening right now, or they choose to lose control when it gets too expensive to support. At that point, they will stop supporting it. And they will have to reset the currency. And there is only one way, and makes it super simple. One way for 6,000 years that a currency has been reset, and that is against physical gold, because gold is the primary currency metal. And gold is all recoverable. So we can account for most of the gold, pretty much all the gold that has ever been mined or is yet in the ground. Now, regarding silver, since gold is recoverable, silver is not recoverable. So that is actually a diminishing real asset that gets used up in manufacturing. Both of them, gold and silver, have properties and qualities that have never been able to be duplicated in a lab. And they are used across the every single aspect of the global economy. So they have, of anything that you can do, they have the most functionality and the broadest base of buyer. But Wall Street has turned that into a product that is a derivative. It's derived from gold and silver, but it's a derivative. It's not real gold and silver.